that was probably an account associated with or affiliated with or friendly with BlackRock, Fidelity, somebody who was accumulating because they all believed, as I do, that this is a monster development, like way bigger than people think. And the issue is we just shifted the aggregate demand curve, right? So when you have supply curve, demand curve, and you shift the aggregate demand curve, the price goes up.
Hey guys, welcome back to Everyday Finance. In this video, Yusko discusses Bitcoin and other crypto according to Yusko. Yusko might suggest that it was likely an account connected, linked, or on good terms with BlackRock Fidelity, someone who was gathering because they all shared his beliefs. This development is massive. Much larger than people realize. The problem is that we recently shifted the aggregate demand curve to the right. So now we need to consider when you shift the demand curve, the price increases. So based on the fundamentals, the price is expected to increase. However, others disagree, pointing out that it has recently decreased. In the short term, there were liquidations from GBDC. Balancing out the initial movements, there were several prominent players. Vanguard, UBS, and Bank of America have restricted clients from purchasing this. So, you're saying Yusko can't spend his money on something he wants to buy because of Vanguard. People should and did leave now. The flip side of that is, someone needs to establish an institution for the elderly, retain their assets, and avoid falling for Ponzi schemes to protect their investments. The first step for Captive was to quickly invest in ETFs all at once. There was very little discussion about the shenanigans that occurred on January 11th. A new set of futures was recently released on the Chicago Mercantile Exchange, but it didn't seem to be getting much attention, and lots of things Yusko discussed. So please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
Well, couple things. One, it's interesting to watch the arc of the story go from this will never happen, right? So, last June, BlackRock applies and was like, no, it'll never happen. I'm like, joking? BlackRock just told you it's going to happen. And so then it was like, well, when it's going to happen? Well, it's probably going to happen in that January window. I really thought it was going to happen on the King's birthday, but they waited till the 11th. So the 8th is, the King's birthday. But bottom line is, everybody's like, oh no, it's a buy the rumor, sell the news. And the buy the rumor part worked, right? We went from kind of 40,000, 38,000, pumped all the way to 48,000. And look, there was some shenanigans, shall we say, going on. There's this guy, I think it's like CC15. I should give him better credit on Twitter. He was tracking these wallets that were just every day buying. And it was like, wait, the ETF hasn't been approved. Who is that? And I would argue, no knowledge, but I would argue that was probably an account associated with or affiliated with or friendly with BlackRock, Fidelity, somebody who was accumulating because they all believed, as I do, that this is a monster development, like way bigger than people think. And the issue is we just shifted the aggregate demand curve, right? So when you have supply curve, demand curve, and you shift the aggregate demand curve, the price goes up. So fundamentally, the price is going to go up. And they're like, no. Look, right after they went down, I'm like, okay. So what you saw was in the short run, there was liquidations from GBDC. They were kind of offsetting the early flows. You had a bunch of the big dogs like Vanguard and UBS and Bank of America that said, no, you clients can't buy this. Really? You're going to tell me I can't spend my money on something that I want to buy? Buy Vanguard. Literally people should, and they did leave. Now, the flip side of that is someone has to be that staid, stodgy institution for the old folks to hold their stuff and not go after these Ponzi schemes, whatever. So not all of the capital that was captive is going to rush into ETFs all at once. So that was first. Second, some other shenanigans, very little discussed thing, Austin, was the same day, January 11th, there was a new set of futures released on the Chicago Mercantile Exchange. Nobody was talking about it. And if you go back at the previous two, December 17th, 2017 and November 6th, 2021, those were tops, right? Where the future allowed the big organizations to get short and push the price down. Well, that certainly happened in that first week. So you had GBTC liquidations, you had the FTX liquidation, you had the shorts coming in, and yeah, we went from 48 down to 38.
As per Mark Yusko, we are currently experiencing what he refers to as crypto summer, a phase characterized by we will observe a gradual progression of higher highs and higher lows. Without volatility, the market will gradually move towards fair value. So why is that? That well after the crypto winter, you hit the bottom and then experience crypto spring. You tend to fluctuate at the lower end, which can be disappointing as not much progress is made. However, things can change during crypto summer. What happens when investors return after recovering from losses? Then they return and say, hey, if the fair value is 52K and Mark Yusko was rounding up to 50, but based on Tim Peterson's meekest law model, the fair value is actually 52. We were in the 30s and are gradually moving towards reaching the 52 Mark Yusko, mentioned a caveat, suggesting that it may happen rather than if it will happen. He anticipated being crowned king of the rock, but he didn't expect all 9 of them to be bestowed upon him. That's great news as it indicates increased demand and brings us closer to fair value. Now that segment is completely finished, the decision now let's shift our focus to the aggregate supply shift. Let's back to the Mark Yusko.
And just retrace that whole period. Remember, see, told you, total failure. Well, last time I checked, right before we got on air, it was 52 again. And that's a big move. Well, what happened? The demand curve shifted out. The demand, the amount of new demand for Bitcoin from my brethren and sisterin, right? I'm a boomer, and all the other boomers out there, they're not going to get a ledger and buy it direct. They're not, right? Most of them. What are they going to do? Some will open a Coinbase account, like my dad, and he has a Coinbase account. He doesn't own Bitcoin then. You tell my dad he doesn't own Bitcoin, fine. But a bunch of them are going to say, hey, buy me some of that IBIT. BlackRock's, advertising this IBIT thing. Buy me some of that. And so that's going to happen. So you and I talked about this last time we were together. You said, well, what's your view of Bitcoin? I said, well, look, we're in crypto summer. And crypto summer is a period where we're going to drift slowly, series of higher highs and higher lows. So not without volatility, we're going to drift slowly toward fair value. Well, why is that? Well, after crypto winter, okay, and you bottom, you get crypto spring where you just kind of bounce around the bottom and it's kind of yuck and not a lot happens. Well, then crypto summer happens where the investors come back, right? They've gotten over losing money and they come back and they're like, hey, wait, if the fair value is 52K, and I was rounding and said it's 50, but according to Tim Peterson's Metcalfe's law model, the fair value is 52. So we were at, in the 30s, we're going to drift toward that 52 number by the halving. But the caveat I said is if, and I might have said when, they crowned the king, that BlackRock was going to get crowned. Now, I didn't think they'd do all 9. I actually didn't. But that's even better because that's more demand. And so as we've come closer to fair value, now we've totally completed that segment of the move. Well, now we focus on the next thing, which is the aggregate supply shift. So the halving, now it's scheduled for like April 8th. Originally it was early May, and then it was, for a few days it was 420 and everybody was freaking out. And now it looks like it's the 8th, which I think is ironic in that that's the solar eclipse date. So I think that's kind of a wild coincidence. Not planned, I don't think. But anyway, so when we have the fair value doubles. Well, no, that's not how it works. I'm like, well, no, that's exactly how it works. Because if you cut the block rewards in half of the miners would go out of business because their costs are fixed. So the price in historical halvings has doubled. Not immediately, but over time. Now, I don't know if we talked about this or not, but I've kind of changed my thinking on that because of ordinals, because of inscriptions, and because of transaction fees, maybe we don't double this time. Maybe we only go up 50% because we don't have to have all of the money come from block rewards. So let's say we get to 75 as fair value. And again, the model will tell us what that fair value is, but let's call it 75. Then what happens is we'll get to crypto fall, which is the June period post the halving. That's when the craziness starts to happen. That's when the FOMO happens. Then we get into Thanksgiving and everybody goes home and everybody's patting them on the back and come on in, you get 2 turkey legs this year. Whereas 2 years ago, you're not invited anymore. You're disinvited if you're a crypto person. So now we're going to get that FOMO top. And in the past, that's gone to 2.3 times fair value. So when fair value was 30,000 in the last cycle, we got to 68, 69. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that would be 150. I think that's baked in the cake. So anyway, that's a long answer to a simple question.
That's exactly
why are ETFs important? They're important. They're really important. And it's because the demand isn't going away. That demand, I'll make a big statement. And I've said this a couple times on Twitter. I believe this year in 2024, which by the way is the first year of this epic, the blockchain era, the truth net, as I call it, I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence. I think upwards of $300 billion is going to get converted into Bitcoin this year.
Mark Yusko predicts that this year in 2024, which is the first, this year marks the beginning of the blockchain era, also known as the truth net. He strongly believes in it. Money will be converted from fiat to Bitcoin more than in the previous 15 years, according to Mark Yusko. Bitcoin's value could potentially exceed $300 billion. Investing in Bitcoin has been a significant focus for Yusko this year. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet next video. Thanks.